All right, good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, so Fed yesterday talked about, I don't know if I talked about it here on the subscriber webcast, talked about how the bands were tight depending on how yesterday went. You know, we were looking at 77 on the down and trying to attack these lows from back in August. You got the low at 44.12 and you got the low down at 43.97, which is certainly what it's trying to, at a minimum, to reach for today. You can see they've engaged the lower Bollinger Band, and we still have this big concentration of a variety of moving averages up there. You know, the 50, the 9, the 20, it's all there, the weekly pivot. So, I mean, for us, all we're doing right now is we are continuing to ride our trade from post-Fed. So it's interesting, if you look at the Fed, and you look at trading post-Fed, it usually goes one of a couple of ways. It's usually three trades. It's either long, short, long, short, long, short. Yesterday was short, long, short. So we ended up short after the, right in the 90s, 93. Then we bought it when they couldn't do shit with it down at 85. And then it set up really nicely with a couple of looks at 4,500. The pre-FOMC price was 44.98. So this is where it just, it set up as good as it can. And we ended up short this pre-FOMC price, and we got the runner working. I think I just rolled down to 1875 on the runner. So it's, the only thing you really want out of the Fed, in trading the Fed, is you want to be able to get one that you can really let work. And it really hasn't been doing that much lately. Did a lot of it in 2022, but 2023 has been pretty choppy as far as Fed days. So, the task today, first of all, is to manage that trade, and then to really see what do the bears want to do. They have a golden opportunity to start a lower band ride, which if you zoom this out, we're talking about, you're talking about breaking this low here. You're talking about converting the 100-day, which is acting as resistance today, and potentially reaching down to that 200-day exponential moving average down in the 43.40 area. And then as you look at the year, you say, okay, so what do we do? And, you got a lot of year left. We haven't really interacted with the 200 since, where are we here? March. And this is the December contract, I get it, but, moving average is moving average. We can look at it on the continuation just for fun. So, again, it's March and we're interacting with the 200. This is where they tried to convert it to resistance, and it was just a completely epic fail. Came back to test it, sort of, and we really haven't been back to visit. What's interesting to me is the 100-day here and here acted as support. So that's really what's in play today. Where do we close relative to 44.53? If they can convert it today, keep it converted tomorrow, then I think you're in a lower band ride. I think you're reaching for the 200, and that'll be a battle that gets fought next week, whether the 200-day exponential moving average wants to hold it up. The thing I would always say to people over the years is, and maybe it happens, maybe it doesn't, and depending on what lean of Twitter or X or whatever the hell they're calling themselves this week you run into, if you really want to see a rally, if you really want to see it get fugly, catch everybody leaning out over the tips of their skis, down at the 200-day exponential moving average, and have them get it wrong. You get epic rallies doing that. And depending on, the forward-thinking, thing that is price, all I'm saying is if we get down there, and it looks like we will, that can't be the end for the bears, because they will take advantage of that and run it up. They're going to have to convert that area and try to stay below. That didn't work in March. And basically you had a move, didn't work. They lifted it. Then we were in this box. Remember this box? And we said whoever wins the box wins the next leg of the market. Well, off we go. So that's really where we stand now. We're at an important point in the tape. What's the 100-day going to do? Do we get a band ride? Do we get down? So on the continuation chart, you're talking about 42.85 as a 200. I think the front month, that's a little more of a reasonable look for the near term, but we'll keep an eye on it. As far as tight price right now, VWAP is 44.25. Proprietary moving average is 44.16. And on a 5-minute, which I think I still have up from last night, we're just riding this 5-minute band down. So you're not going to see any kind of a meaningful bounce until this line gets converted. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come join us over on our new Circle community. The webcasts are over there. You've got the pivots, the charts. Right now we're just doing subscriber events, but we're going to be doing some evening recaps over there. It's just a lot cleaner way to access everything that we're doing, and there's going to be some opportunities for courses and as always, we got the room. Every day we do our thing. All right, have a fantastic day. Safe, healthy, take care, trade them well. I'll talk to everybody tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.